Hey guys, welcome to Chart Guys Trade by Example. In this program, we're going to look at Home Depot today, and what we're going to do is apply trade theory, we're going to apply strategies and high-level concepts, and we're going to talk through trade step by step by step so you can understand how we take the notion, the concept, in this case, descending wedge, and actually apply it in real time or near real time, because we're going to be using the chart replay feature so that you can see step by step how candles develop and how we think about things that we think about and turn those thoughts into profitable trades. So let's start here on Home Depot because, as always, we need to have a really sound understanding of what our narrative is. Without a narrative, we don't have any context. And without context, our price action is really just floating in space. You have no idea what sort of follow through you're going to expect. You have no idea if you have supports and resistance. You have no idea what the market has been doing with this particular stock. So you always need to have a narrative. It's really hard to just jump in and out of a day trade when you have no context, don't like it. You're going to get in trouble if you're just taking trading tips from somebody. In fact, you're going to get in trouble if you're taking trading tips from somebody in general. That is why Chart Guys focuses on teaching you to trade, and this is one of the ways that we do it. So let's get started. Home Depot on the daily time frame. What's not to like about this? The bulls have been in absolute control. The volume is holding steady, been overbought on the daily time frame, and this is where a lot of people are starting to scout for bearish entries. We're overextended. We need to see some pullback. When's that going to happen? Is Home Depot ready for a short? How about now? Have we broken the trend? Constant barrage of questions. And the answer is really the same for a lot of these. Yes, we are in a good position to see some weekly pullback. Yes, this would be a nice place, but we haven't seen any sort of sign that the bears are here or that the bulls are ready to give up this run. You do not want to step in front of the bulls. Let the bulls show you that they're bulls, and that is exactly what we're seeing here. So I've got the chart loaded up on the daily time frame. We're looking, the last candle is April 7th, so we've had 2 days of trading since then. The reason that I want to show you what the trade looked like is because we're already scouting for bearish entries. Even on these 2 days of pullback, it's not particularly weak. In fact, this is really a healthy pullback. We're getting lower lows, sure, but we have dojis, and those dojis indicate a little bit of indecision. There's no real dominance here by the bears, and it is a controlled situation that is really ideal for the bulls. So what we're going to do is look at the hourly time frame for this setup. So here is our, let's go back a titch. Last candle, April 7th. Put that into context. This is that trading day. So when we are looking at this setup, what we're going to be doing is focusing on the fact that we've got ourselves this nice contained range. Anytime that I get into a situation where I start to see lower lows without follow through or higher highs without follow through, I start to connect the dots. And I apply this concept because I like to be a visual trader. I like to look at things with the expectation of what happens if we get back up over here. If we see a drop and we see another confirmation of a resistance or a support trend line that shouldn't exist because really it's just theoretical, then that tells me and gives me confirmation that we are in a pattern that we can utilize. So what I've done here is I connect the top of my green candlestick. So go grab that guy. I grab the top of this green candlestick. I'm always using the bodies. That just works for me. Then I drag this guy down to the lowest point on this candlestick, and I get myself a nice confirmation here, and I get a nice confirmation here. All this does for me at this point is tell me that, yeah, we bled a couple days, but look how little of a bleed that is in the grand scheme of things. We're sideways consolidating. We got ourselves a nice bull flag situation. Bulls are really still in control, and they have the opportunity to continue to the upside. So despite the fact that he's seen some lower lows, this doesn't look right yet for a short entry. And yes, of course, you could profit from intraday shorts. There's always little setups and patterns inside patterns. Yes, but if you're looking for that big daily swing on that weekly extension and that daily overbought RSI, this isn't it. This is not what we want to see quite yet. So I'm going to jump ahead one day. We're going to go to the next chart here. This is the next day's trading action. So overall, it looks like we're still sort of keeping the same look and feel that we have been on the previous. We appear to be trending ever so slightly to the downside, lower highs, lower lows. It's all great. But do we see any sign of weakness yet? No. And in fact, if we go to the hourly time frame, we can see almost the complete opposite. In this case, we came down, we tested this area of support again. Bulls just stepped on their acceleration. They blew right through the trend line resistance, which had confirmed a couple times, and the bulls owned the day. They didn't even consolidate very well at all on the hourly time frame. So what this tells us is that we are in the midst of a breakout. We're going to treat this as a flag. We got our higher high. We just rocket shipped right to the upside. 314 or 315.14 is really the only resistance we have at this point, and we just clipped over top of that before the day was finished. So a very, very strong showing by the bulls. Again, we have no interest in shorting up here. This is a little bit of red, but it is not a huge amount of red. In fact, this is healthy for the bulls, so we're going to get in the way. We want the bulls to show us that they're done. They want to be exhausted before we're looking for those longer term shorts on the daily time frame. And again, just nothing but strength so far. So what I'm going to do now is I'm going to take this candlestick information, all this, I'm going to jump to the 2-minute time frame. So everything that you see here is contained inside these few hourly candlesticks. There's our drop, there is our run up, and there is our little choppy chop at the end of the day. Here's our drop, here's our run up, and here's our choppy chop. Now, the reason I have set all of this up for you is because in the grand scheme of what we're doing here, we need to understand the context. We need to understand that we had several days of sideways consolidation, and we need to understand that the day before, this was yesterday, that we had a very strong showing of strength and the bulls have broken out of their area of containment. Let's call it that way. They're no longer being controlled by that trend line and they are capable of almost anything. So what we need to do is go mark out some key levels for ourselves. What is nice and useful? Well, we got a 314 area support. That's going to be an important level from us, just for us from yesterday. And that's important because we had several touches in that area. It's just a nice little way to, again, box things in visually for ourselves that can give us a little bit of insight. If we break a key level or a zone of support early in the morning, it's generally leading to us believing that we're going to see further downside. Break 315.25 right out of the gate. That's going to be a little bit more bullish, and it's going to match the narrative. Again, what is the narrative? Unbridled bull strength coming out of 3 days of healthy bull flag consolidation. So bulls still have momentum. And what do we see first thing in the morning? Well, let's go and let our 2-minute bulls run ahead. So I'm going to be walking through the 2-minute time frame today and skipping around a little bit, and we'll see what we see. So at this point on the 2-minute time frame, we haven't seen any sort of sign of any weakness. The bulls have run right up. We've got ourselves new highs. They're not really slowing down at all. The only thing we can look at is 2-minute overbought RSI, and we can look at maybe some losses to some of these levels. This isn't really healthy 2-minute consolidation. We haven't discovered ourselves a new low, but what we did do is establish the first little counteroffensive. Despite it being incredibly small, this is a level. It's going to remain a level. When you only have 317.09 to work with, you got to work with it. So now we're watching the bulls. We're excited. We're glad we're not in our short position on the daily time frame. Again, they haven't shown us any sort of weakness, and we're just going to let them do their thing. I'm not taking a trade at this point. I am just watching and waiting. Now we see a little bit of more extensive pullback, and I'm going to be asking myself, well, we've got 317.09. What is going to happen at this point? Two scenarios, of course. We set a higher low or we break below. In this case, we break below. Now, where it gets interesting is the fact that we broke below. We didn't see a ton of follow through. We bounced off of, I believe it is 317. What is our low on that candlestick? Yes, it is 317, and we continue. We'll wait for our little pivot highs and lows to give us our numbers. And as we continue, we move up. Now, again, we ask ourselves another question. Are we going to get a higher high? Or are we going to get a lower low? Because these two things are important. If we get a higher high, then we develop into a 2-minute uptrend. If we get into a 2-minute uptrend, we can start drawing more trend lines and more patterns and more recognizing criteria for some potential play setups. If we continue to set 2-minute higher lows and higher highs, great. We will start buying those trend bottoms and we will start exiting those trend tops, and we'll use our RSI to determine when those moments of trade action are happening. But we need to watch the chart develop a little bit more. It's not quite ready for us yet. So what happens? A 2-minute lower high. Okay. And we get a 2-minute lower low. So now we've got the potential of two things happening, really. We can look at this as a potential 2-minute downtrend because we have confirmed lower lows and lower highs, but the follow through doesn't show up. So we're waiting and we're watching. We're getting more curious about what the heck is happening here. Okay, well, are we going to get a new higher high? Like, what is the trend doing? Why are we bouncing back and forth here without a real lack of clarity? Do we have a 2-minute downtrend? Yes, we do. So, okay, we can play that. We can look for these lower lows, and ideally we want to get a higher low. That's the thing that throws us off when we're trying to trade this trend. If we are going to be playing a perfect 2-minute downtrend, what we're going to look for is these areas of resistance to come into play, and we're going to look for nice trend line support. But in this case, we can start to see that we round our bottom just a little bit, and we head back up. Now we're heading back down, going sideways, lower lows, no follow through. Starts to get a little bit weird. So what I do at this point is I start to ask myself, well, maybe, just maybe this isn't a 2-minute downtrend. In fact, the bulls have been so strong lately on the daily time frame, on the hourly time frame. We're in the midst of an hourly breakout, second day extension, that the most likely outcome is not actually going to be a 2-minute downtrend into oblivion. Is there some sort of reversal pattern that I can carve out here? Is there something that I can maybe watch for to see if it develops any further? I got some potentialities. I'm getting my lower lows without any follow through, so that's telling me that the bulls are still here a little bit. And I have lower highs, so it's starting to feel a little bit like it did on the hourly time frame over here. So I go back to that beautiful little setup, and I say, okay, well, instead of just taking and assuming a parallel line to this area of resistance, which is confirmed a couple times for us, let's go and fix that a little bit. I'm going to go and grab the bottom of this red candlestick, and I grab the bottom of this red candlestick, and I'm curious to see, can we develop this tightening range further? And if it does develop further, can we respect the trend lines more effectively? And if we do, then we have ourselves a descending wedge pattern. So this is the real moment as we get down to this level. If this is a valid area of support, we shouldn't break through. And this is what we're watching. And when you're playing what you assume to be ascending wedge patterns, this is really the most optimal level for you to take an entry. Against that area of support, you don't want to let a lot of wiggle room to the downside. It is difficult to place stops in these situations because you can just go below just a little bit more and see a reversal. That is the difficult part about them for sure. But what we do see is that we get this eventual tightening range and we continue down, test that support again, multiple opportunities here. And we start to pay more attention to our lower highs. So my closest lower high at this point, my closest lower high at this point is 316.61. Now, if I'm going to break out of this pattern, I need to do two things. One, I need to break my trend line, yes, but I'm going to be using price action to verify that there's a trend change. We need to get a higher high over 316.61 to tell me that the bulls are interested. So we continue to grind down. Bulls showing up a little bit now, nothing really crazy impressive. The volume here isn't giving us a lot of help or indication of upside potential, but what we can see is that overall, we're doing okay. We come up against our trend line, we break it ever so slightly, get a higher high over 316.61, and now things are starting to look a little bit interesting. If we have taken an entry against our area of support, we are already in a nice position, and we have just the babyest amount of a 2-minute higher low formed here, and we can watch this play out. If we have not quite entered yet, we can wait for a 2-minute higher low to form, and we just did that now. Backing up our baby support, and again, retaking that 316.61 level. So now we are outside of our pattern. In theory, we either have one of two entries. If we have broken above and waited for that back test, I wouldn't be willing to put on much more risk than falling under the 316.35. I don't want to fall back into pattern. That's going to negate the entire process here. The second opportunity for you, of course, was against that trend line support, in which case I would already be comfortable and probably just set my stop at low of day to allow myself a lot of breathing room. That's the risk to reward when we are buying at the bottom of a pattern that can continually just drop to the downside. Now let's look at what could have happened. 315.90, we could have gone up, and we could have been in the red for a long time. So that is the risk to reward, buying at the bottom of a trend line in anticipation of a break, or waiting till you get the actual break signals, and ideally, didn't show up in this case, but ideally, you get a nice uptick in bull volume. So let's see what happens. We're going to start rapid fire clicking because we are already quite some time into this video. We got our nice 2-minute uptrend. not really even a trend, like a 2-minute breakout, and we can start looking for areas of resistance. A big one for me is going to be this 317.85. We go to our 15-minute time frame. That is a big spike to the upside, so I'll plant my target resistance right there, and we keep on trucking. Now we get a little bit of a waffle, or a yeah, let's call it a waffle. We get that price waffling just a tiny little bit up here. And when we start to see a breakout and we're trying to establish some higher lows, we can zoom in and we can play the flag game again. We can go in, grab our slightly lower lows with a parallel line drawn to the bottom, see if that fits. And what do you know? In this case, we see some nice continuation on increased bull volume. The bear volume is really negligible inside this little mini pattern, and we continue in a very healthy way to the upside, hitting our 317.85 area resistance. I'm happy with that. I'm already out of the trade by that point, and that's just a happy target for me. I don't get too picky. I'm happy to see the price just do exactly what I want to and stick to my plan. Over the course of the day, yeah, you get a little bit more upside. You don't quite hit high a day quite yet. I believe we get there closer to the end of the day, but this was just enough for me to be very happy with my ascending wedge into a micro bull flag and that continuation. So I guess the key takeaways from this lesson are: understand your daily context. Don't try to short something that has not given you any indication that there is weakness. Apply your patterns as a visual template for expected behavior. It gives you a visual representation. It is an architectural, I guess, a construction that allows you, like a template, allows you to visually represent what is happening. So I'm not buying specifically on the breakout of that pattern. I'm buying at a new higher high over 316.61 that happens to coordinate with my overall approach of this descending wedge pattern. I am also buying at the areas of support, proven areas of support, because this by itself can be treated as a trendline support. It has been confirmed and validated, and it is beautiful. So that is it for today. Hopefully that was helpful. If you have any questions at all, please do let me know. And have a wonderful weekend. And I'll talk to you very soon. What these little cuties are up to. Ruby. Hi, guys. Hello. Hello. How are we doing today? Good? Wanna play outside? Come on, Ruby. Yes. Come on, let's go. Let's go outside.